Hello and welcome to another update video about Solana. So let's zoom out first and let's take a look at this price chart of the December lows. We can still see that we're tracking an overall bullish scenario with the wave 1 to the upside into the January highs, and potentially, if price has formed a lasting low here on the 10th of June, which is not entirely clear yet, but I think there's a decent chance, then this is a WXY structure in wave 2. If we get one more low, but we will only know that if we break through the yellow support area, then support is likely going to be around the $12 level or even $10. These Fibonacci levels will then become important. Yeah, and then it could just be a so-called WXYXZ pattern. And I think I shared with you in one of the previous videos the retracements, right? So we looked at the retracement levels, which are relevant for this move up here. Because, you know, if this is a WXYXZ pattern, which is a very complex correction, then this move up would be another X wave, and double X sometimes they call it. And this ideally should not break above $23 and 13, 23.30. We've got some resistance there anyway, so it hasn't broken that. So that option is still on the table. So it's just something we need to be mindful of as price does a pullback, or if price does a pullback, which is not entirely confirmed yet. At the moment it seems like we're doing a bit of a pullback, but we need a break of the trend line to confirm that it is a deeper pullback that will at least get us into this yellow support zone. So let's take the retracements out again. But for now, we can track it like this because we have a 5-wave move to the upside, and the first deeper pullback will give us some clarity as to whether we deal here with a larger degree 1-2 setup with a third wave to come, 4 and 5, or if this is just some kind of a correction like a WXY structure, which could be complete now as well, and it would then make new lows, okay? Well, not necessarily new bear market lows, but a low below the 10th of June low. So that is going to be the moment of truth, the stress test for a potential bullish scenario highlighted in yellow on this chart. But again, the move up highlighted in yellow would only be a leading diagonal. So as I suggested in previous videos, it needs to prove itself. It needs to prove itself because we cannot rely on the idea of a leading diagonal change trend. It would have to be an impulse, which it's not. And if it's a diagonal, we need to be very mindful that the chances that support is breaking are still fairly high. So it is going to be that 1490 level at the moment, which is the main pivot point, which decides between a turnaround to the upside and a break to new lows. Okay, so that's the main pivot point. The closer we get to this point, the better the reward to risk ratio for a potential trade to the upside. But the closer we get, the higher also the odds of breaking support. That's the dilemma we always deal with in financial markets. So we've got 5 waves up, as you can see. They could be complete. Yeah, we have a corrective move in 1, wave 2 corrective, 3, also 3 waves, because we deal with the diagonal structure. So we need to be aware that all the subwaves are corrective, the wave 4 corrective and the wave 5 as well as an ABC structure could be complete, could always extend. I explained in previous videos, diagonals are inherently difficult. They extend as long as they can, and they will run until they get exhausted. Now, what is typically a first sign that a diagonal gets exhausted? It is typically a break below a trend line, because diagonals tend to follow trend lines quite nicely. We've got a bit of a pullback, but it could just purely be a pullback to the trend line at this stage. So we're watching that. If we get a sustained break below this ascending trend line, which is fairly well defined, I think. Let me just readjust it maybe a little bit. Bring a bit closer. But yeah, we've got enough touch points to consider it a valid trend line. It's just pulled back to the trend line. No buy reaction yet. I think it's likely to see a little bit of a reaction. But here, yeah, here we have now a small moment of truth, and a bit of a make or break point here. Not really, but a bit of a moment of truth where if that trend line breaks, I think we have some confirmation that we are now in the wave 2. Better will be a break below the last swing low at $19.30. If I look at Fibonacci retracements of the wave 4 low here, then you can see we're currently pulling back to the 50% retracement. That's always also a good sign. I mean, if that level breaks, it's also a first indication that the wave 2 has started. That would pretty much go together with a break of the trend line. So we don't need to be watching both. We talk about a sustained break here. So not just a wick below it, but a sustained break. Now, I don't know, market is very boring again. Yeah, also today here. Could be that the market is really waiting for CPI data on Wednesday. Really difficult market, very boring at the moment. And we now wait for the first decent pullback. Now, if that pullback occurs now, and I don't have strong confirmation for it yet, all we see is a few red candles, but they are not enough to confirm that this wave 2 has started. We need to see a break below the trend line and ideally a break below 1930 for confirmation. Until then, this can easily follow the trend channel here, this wedge pattern to the upside, again to resistance at 2240 and then 2330. As I shared with you, this is also a Fibonacci retracement level. And if we break below the trend line, we have a good chance to get into this region between 1880 and 1490. Now, the 1490 level is the 78.6 retracement. So a break below that level would seriously challenge this yellow wave count, this 1-2 setup. Because a sustained break below the 78.6 Fib level typically makes such a 1-2 setup very, very unlikely. That's ultimately the level to watch. But obviously we've got some support levels above that. It doesn't mean it has to come down that much. But if it does, it needs to hold it or we will flip most likely here bearish, okay, which is still a very likely option on this chart. But this is the pivot point. That's the important parameter here for trading, also for calculating reward to risk, in my opinion. But first of all, when we come down, it needs to do a solid ABC structure anyway. So yeah, I mean, it might be in the early stages of wave A, but it won't be until maybe later today that we can confirm. Okay, that's my update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.